Welcome back. You're watching Stock Picks, and joining me now to unpack Alphabet, Meta, and Nike is Bright Khumalo from Vestact. Thank you so much for your time, Bright. Now, these are your stock picks for today, and actually, you're starting us off with two tech giants. And are you saying that you'd still be plowing into these stocks, and there's no sort of nervousness in terms of how far these stocks have run so far?
That's actually a very good way to open it, because I mean, with buzzwords like the Magnificent Seven, it'll make you think all of them have equally benefited from the upside. But when you actually do a bit of digging, and a bit of clicking through, you'll see that the likes of Alphabet and Meta, even though Meta has done exceptionally well recently, actually haven't benefited as much from the AI craze or the AI wave that we've been seeing, in the past, I don't know, a couple of years. So starting with Alphabet, which is obviously the parent company of Google, they had an unfortunate moment, when they issued their first version of AI. It turned out to be not what they thought it would be. There were some racist remarks made there not made, but experienced by the model itself. But the reason why I'm still relentless, in being bullish, especially on Alphabet when it comes to AI, is because they've got a wealth of knowledge on their, search system. To give you an idea of how hard it is to compete with, Google as a search engine itself. There's over 200 new search engines that have come out during the AI craze, of which they've done almost to no dent to Google itself, because they still control about 91% of the market, according to the latest numbers I've seen from Tower and other data companies, which is quite interesting, because even Microsoft's competing search, Bing, I still don't hear people talking about Binging it. So there you go.
So, I mean, would you say then that Google is still far ahead in the race of AI?
With the new refurbished, AI capabilities, they don't even call it Gemini anymore. I don't know what they call it. The latest version. Essentially, it's going to be pay for play, meaning like your Microsoft 365. They're separating Office and all the other things on the one side. And this is what's going to be happening with the AI, because they've done testing in the background and they've seen that they've got an exceptional result, and it's worth people subscribing into it, and all of it being a whole separate revenue and profit generation unit is quite exceptional. And I don't think the share price currently reflects that, because there's still the hiccups that we saw from the first generation of quote unquote Gemini. So people are not quite sure that it's there yet. But if management is confident enough to want to charge you a subscription fee for it, I think what we're going to see is going to be quite amazing, and it's going to blow our minds.
Yeah, I'm going to come back to the topic of revenue generation, but just considering the mistakes and the missteps that have been taken when it comes to AI. Of course, you talk about what happened a couple of months ago. There was a video that I was looking at in the comments underneath that we're talking about, how people are concerned about the leadership and particularly the CEO. And I'm wondering if that has filtered through to investor goggles, that maybe Google does need a little bit of a leadership shakeup or a CEO change at this point.
Well, are you talking about the CEO of Alphabet?
Yes, of Alphabet.
I guess so Sundar Pichai, I think, is an exceptional leader. I mean, yes, I mean, people do complain about CEOs every once in a while. We still think he's the right jockey for the horse. But I mean, we've invested in Google when they were going through a massive transition, a management transition, where they didn't even, have, CEOs that, would, people would get excited about. I think it was Warren Buffett who said you must invest in a company where even an idiot, will be able to run it, because eventually one will run it. So there you go. Google has been one of those businesses And I think with Ruth Porat as CFO, it did quite help a lot in cleaning up Google in terms of looking on their financial side of things and increasing their profitability. Hence why they're sitting at, all-time record cash position north of 104 billion US dollars. I don't know how many JSEs listed companies you'd have to meet, to justify or to actually understand the scale of the cash that a company like Google is sitting on. And obviously, once you have all of these other revenue and profit generating units, that number can only go higher. So I'm still very much, bullish on Google or Alphabet. And at an enterprise value of around 22 times, is still relatively cheap for a technology company that's still growing so much and generating so much cash. Because when we first bought a company like Google, it was trading at a PE, for example, of north of 400. Now we talk about an enterprise value of 22 and a PE of less than 25. It's the cheapest it's ever been. And if you ask me who's going to be the next Google, I'll answer you comfortably and say it's going to be Google.
Yeah. Of course,
there's no next Google. It's very hard to get individuals to, converge into a search engine to get those, that scale that Google has gotten to even, take away about 10% from their market share. It's going to be very hard. So I don't know. The next Google is going to be Google, at least for the next while.
All right. Last question on Alphabet. I do know, obviously, that they were struggling a lot in their cloud business. Of course, they are now in a profit-making position. And I'm wondering if you're looking, but still, as much as they are in a profit-making position, they're still not where their competitors are.
Scaling.
So are you looking at that as, there's just more room for upside?
Potential.
Okay.
Of course, there's much more potential as compared to something like an Amazon Web Service or Tencent Cloud or anything of that nature. And most of the upside is going to come from, potentially from AI as well.
Okay.
I mean, I remember I think it was a year and a half ago where, articles were coming out left, right, and center saying that Google is nowhere in the cloud game. Now Google has solid clients and, they're plowing away client by client. And I'm happy to see it, especially since it was written off back then. And now we're talking about it's less than about 5% off its all-time high. So I've been a very happy holder for our clients in Google. So, and they're only off now in the last 2 weeks during this small little shake-up, but otherwise, it's been doing exceptionally well year to date.
All right. Well, let's move on to Meta. And as we're on this AI train, are we sleeping on Meta being an AI play?
Look, let's wind it back, to what I see now currently as probably the comeback of the century. When it comes to, technology companies. I think Meta, to give it context to those who haven't been following these things quite closely, Meta, they were down about 62% from their highs not so long ago. I think it was 2022, because everyone was worried that Mark Zuckerberg is betting too much on, the goggles, and they think, no, he has forgotten about the business. And obviously, digital advertising was going down. And digital advertising has always been cyclical. It wasn't just a Meta specific thing. So they were like, oh no, it's going down because he's focused on this thing. And I mean, it was so cheap to get, Meta at those prices, and we were buying, hand over fist. And we're happy with our decision then. And we still think Meta, relatively speaking, is still undervalued. I think the bigger issue back then in 2022 was the fact that Apple had changed, their security settings and weren't allowing targeted ads anymore. And obviously with AI, Meta found a new way to, execute targeted ads by, scraping the website that you go to without actually needing to having access to your Apple account or any other account for that matter. So that's been a big change. And I'm pretty sure with the team that came up with that idea, can come up with many other exciting stuff using similar AI, to plug and play into the metaverse.
Yeah.
Not the one in the goggles, though.
Yes. I mean, let's talk about the
The
maturity
universe of Meta.
Yes, let's talk about the maturity of the company, and maybe you can include, the role of AI there. But I mean, just now they announced that they're starting to pay off quarterly dividends. It did come as a surprise to investors. Is this signaling maturity in the company at all?
I mean, the simple answer there is yes. But again, Meta is in the same position as many of these big companies, like we just spoke about, Google, Alphabet, Microsoft, Apple. All of them, they are highly cash generative. And for Meta, for a long time, it's been seen that they were not good allocators of capital. So issuing a dividend, goes against that thinking, because they've done enough in terms of share buybacks.
Yeah.
The share price is up north of 130% in 1 year, and up 44% year to date. So it's not going to be cheap in terms of buying back its own shares. So the next best, decision for Mark Zuckerberg for capital allocation, it's definitely going to be, a quarterly dividend. And if I was an employee at Meta who was thinking to move over to, say, Google, Nvidia, or or another tech company that doesn't pay a dividend, like Salesforce, now I'm like, I've got all of these shares, I'm stuck in, and now they pay a dividend, and I'm going to be able to pay down my loans quicker. So what's the point? So I stay in my team a bit longer, and that's a very positive outcome for Meta in terms of keeping talent. So it's positive overall.
All right. It's really, really been interesting to see the evolution of Meta as a company, but also looking at the stock and what it's managed to achieve in at least the last 18 months. So really looking
And I mean, we haven't even spoken, and we haven't even spoken about Instagram, which has been, the talk of town as of late. There's even a suit going on with the founders of Instagram and Mark Zuckerberg personally, and Facebook as a company. So it just shows you that even though they don't break down the numbers, there's a lot of money being made there, and these guys want to be made good for it or whatever. But let's not go into too much detail in what it is.
All right. Well, let's go into sportswear Nike. There seem to be some highlights and lowlights there in the Nike business, particularly when you look at the latest results that they put out. Talk to us about those, and if the highs outweigh the lows at this point.
Look, Nike is down 12.6% year to date. Over a year, they're down about 26%. And, if you look at the S&P 500, up 6.2%, up north of 30%. In 1 year, up 6.2% year to date. So it's going to be a very hard argument to make for Nike. But I mean, this is not the first time Nike has been cyclical. It's a cyclical business after all. It's apparel, it's clothing, it's J's, it's cats, whatever you want to call them. Currently, the narrative that I'm reading about and seeing in the market is that, on running, a lot of these high-end sort of Lululemon on the apparel side are competing, for the same, market share as Nike. But if you look at it on a one-for-one basis, these companies in the athleisure on the Lululemon side, they own a small portion of the market, and Nike owns, the difference. Then there's Adidas, Puma, and all the other apparel companies which don't own that much. And obviously, yes, you could make the argument that they might be competing with the likes of Temu and Shein, or all the other H&Ms and fast fashion type businesses. But that's not exactly where they are. They're somewhere in the middle where price does matter, and hence the margins are actually quite sweet. So looking at the current situation, obviously they were hit massively by the supply chain challenges coming out of COVID and during COVID. I've spoken about competition recently, with the likes of Lululemon and On Running, which On Running is not even profitable. So is it really competition? and other economic, headwinds. But with the economy of, the US firing on all cylinders, retail sales increasing year over year, and inflation seeming to be very sticky, I would say it's on the Nike side for the most part. But the biggest catalyst for Nike going into this Olympic season or this season of sports is going to be the Olympics, where each country is going to have to unveil, their merch. And guess who's going to have 99% of all the countries? It's not going to be Adidas, which, by the way, even their own country, Germany, has dropped it.
I saw
So
that.
Go figure. It's going to be Nike who's going to be the center of attention. And maybe there's going to be one or two countries that, use Adidas, countries that are not woke enough, maybe. And on running, I'm looking at Switzerland, maybe, because it's a Swiss company. But Nike is going to be the center of attention, and they're going to be, you're going to be wearing Nike merch going into these Olympics. You're not going to be wearing, on running, which is going to cost you about 4 times the price of Nike for, I don't know, something similar or maybe even inferior.
Okay, all right. Well, let's get on to our educational segment for today. I think we have about a minute left. You want to talk to us about capital gains. What do we need to know about that?
So capital gain, in essence, is basically the increase in value of a capital asset relative, to the price you would have originally paid for that asset. The reason why I bring up capital gains is because the reason why we're in the investment game to begin with is to make some gains.
Yeah.
So obviously, once you make those gains sometime in the future on your, your investment that you've made, whether it's Nike, Google, Apple, Amazon, Visa, or whatever, is that you do make this gain. And then once you make the gain, obviously, SARS is going to come to you because they want their half. Our capital gains here in South Africa, they pegged at around 18%. So please do give SARS their portion when you do make, the gains, and you do make, when you do make the sale sometime in the future.
Yeah.
So I guess that's going to be my contribution, to today's educational segment, is to say, yes, we are all excited about, gains. It's great. It's green. It's the color of my favorite color. I mean, there's always green everywhere I go. And eventually you do have to pay SARS. Don't forget that, because if you don't pay SARS, they'll come for you and they'll, take more than they should have, because there's interest, involved on top of that. So,
and you still have to pay
capital
them.
gains.
Yeah, you still have to pay them. But listen, I constantly have interviews with Edward Kieswetter, and he's always telling us about the penalties that SARS is imposing on people who don't pay.
Always be on the right side of SARS when it comes to that. Just pay your capital gains tax and be happy.
All right. Well, thank you so much for that, Bright, and also just a reminder to pay the tax man. That was Vestact's Bright Khumalo.